Hi, everyone, and welcome to this special episode. My name is Tony Okafor, and today I really want to talk to you about something very important, especially if you have your money in the Nigerian capital market. So, 2026 is a pre election year ahead of the 2027 general elections. Political tensions, political uncertainty, and investors' jitters can obviously create real pandemonium or volatility in the NGX. But here's the good news: many smart investors have used this opportunity and used this period to build significant wealth. So, in the next couple of minutes, I'm going to be breaking down the do's and don'ts of a pre election year. Okay. I'll break down what you should not do that could potentially wipe out your investment and what you should do using proven practical long-term investment strategies. So if you sit with me in the next couple of minutes, I'm going to break this all down for you. We'll use historical lessons, current realities, and practical strategies. So let's dive into it. Now, understanding pre-election dynamics is critical. So first, why are pre-election years so different? Right? Historically, Nigerian capital market experiences heightened volatility, heightened uncertainty during pre-election cycles. Okay, if you go back into 2010 slash 2011, 2014 slash 2015, 2018 slash 2019, even 2022 slash 2023 election cycles, we see something that is notable. All right. We see notable dips in the all share index due to political tension, due to uncertainty, foreign investors exiting the market, and naira pressure. Now, most of these happen during the second half of of the pre-election year, and we are in 2026. We are moving to the second half of 2026 and proud to that election year, which is what we are going to be discussing now. What are the key drivers to volatility right now? Foreign portfolio investors may reduce their exposure if uncertainty continues. Political pressure could ramp up, especially now that political parties are beginning to select their candidates. And this could also increase inflation when they start spending, right? The central bank has already warned that pre election spending could heighten inflation, could heighten volatility in the financial market. And obviously, when this happens, the central bank would have no other option than to begin to want to tinker with the interest rates. So we are in 2026, and the NGX, as you've seen, it's been moving in a very strong direction. The all share index is high. It's posted significant year-to-date returns. It's crossed major milestones, and the market is over 140 trillion naira in market cap. So we've seen signs of resilience, but we must now focus on the potential H2 volatility that is imminent. Okay. Now, pre-election years will test your nerve, but it would obviously reward you if you stick to the rules. So let's get into the do's. Let's get into what you should not do. Now, do not panic sell on short-term volatility. Like you see some stock, I mean, you have a stock that is maybe on offer for a few days and then you want to panic to sell. Do not do that. Okay. Election news on or negative headlines could trigger sudden dips. Selling at the bottom will lock you in losses. So that is not what you want to do. Back in 2015, we saw many investors exit their positions due to political tension. All right. But we'll also notice that post the election, we saw significant recovery. So you need to set clear rules upfront. For example, you only sell a stock if the company's fundamentals break irreparably or break in a manner that doesn't align with your investment strategy. Okay. Not just because of a daily noise, right? You cannot sell your investment because of one short term volatility. Okay. Also, do not chase rumors or social media hot tips. Someone forwarding something to you on WhatsApp, some WhatsApp, expert gurus promising quick reach investment. This could be very dangerous. So, speculation without research could lead to heavy losses in pre-election years. So you really want to be mindful of this. So again, don't also avoid diversification. What am I saying? Diversify your portfolio. Do not put all your eggs in one basket. Okay. Over concentrating on equities or just one sector, maybe like banking, or you are fixated on a particular stock, or you have emotional attachment to a particular stock or a few stocks, could amplify risk if anything were to happen. So let's say foreign portfolio investors decide to exit the market, or we have some significant policy shift. If you just have a concentrated portfolio, these are the types of portfolio that suffer the most when there is volatility. So you really want to spread your risk. Okay. Also, do not over leverage. In fact, if it is possible, do not borrow money to invest in stocks. Do not borrow money to invest in stock. And obviously, borrowing heavily to chase momentum or try to perfectly time the market rarely works in uncertain times. So, in fact, trade less and make more, quality over quantity. That's what is going to be key in the second half of 2026. So, avoiding these traps is half of the battle. Now, let's talk about what you should do in a pre election year. I mentioned that you need to diversify. So, ensure that you have a diversified portfolio spread across equities, spread across fixed income, dollar denominated assets to hedge against naira risk. You can even have selective real estate, commodities, stocks, or investments in those type of assets where possible. Okay, you can invest in metals, whether precious metals or base metals, just to ensure that your investment or your portfolio is well diversified. Focus on fundamentals and dividend paying companies. Okay, look for undervalued stocks with strong balance sheets, stocks with consistent dividend payout, stocks or companies with low debts, right? Stocks that we refer to as dividend aristocrats, okay? These are companies that would usually pay dividends and they pay reliably well. So these type of companies tend to do better and they recover faster when there is volatility in the market. Again, also ensure that you have long-term view of the market. If you follow us on this channel, we'll talk about having a long-term view. Have a long-term view, use smart entry strategies. So in a pre-election year, especially in the second period of the year, you have to look for companies that are undervalued because you would see these opportunities come. You see opportunities in companies that are undervalued, probably because a lot of people have exited and then the prices are lower. Okay. Experts often point to between September and January patterns as potential value zones where opportunities for investment will come. Okay, so a lot of because I mean it's obvious that around that time there's going to be a lot of heightened noise, a lot of panic, uncertainty. This is when you want to be making your investment. Also, stay informed. Follow rule-based investing. Follow us on this channel. We'll provide weekly updates on the Nigerian financial market. And my guest, with over 5 decade combined experience, provide insight and expert view of what's going on in the financial market. So if you really want to track credible sources, track the NGS data, CBN reports, companies' earnings, institutional flows, also monitor government spendings closely. So when you use a combination of both technical and fundamental analysis, this is really going to help you be able to situate your investment strategy accordingly. All right. Discipline will beat any form of emotional investment anytime. Okay. Another thing I really want you to do is learn this habit of documenting your investment thesis for every position that you have. I can take that again. Document your investment thesis for every position. Why are you investing in the stock? Document it. Take a moment, document why you want to invest in that stock, right? So that whenever you have an opportunity to go back and look at the reason behind you, you'll be able to verify whether you have made a solid investment decision. Okay. Now, investors who focus on solid dividend stocks and maybe bought selectively during pre-election years always come out stronger with both capital appreciation and steady income once stability returns after the election. So remember, this video is purely educational and general information only. It's not a personalized financial advice, and past performance, as I say, it's not a guarantee of future results. So always do your due diligence. Speak and seek financial professionals. Talk to them about your investment plans. And in closing, do not panic. Avoid panic selling. Don't invest on impulse. Don't invest based on rumors. And always diversify your portfolio. And I mentioned earlier, avoid borrowing to invest in the equities market. Use technical and fundamental analysis, and always have a long-term view when you are investing. Pre-election years can feel really stressful, but they can also create opportunities for those that stay calm and are prepared. All right. That's all I wanted to share with you briefly. So please like this video, share and subscribe to the channel. Share this video with your community. Hit the notification bell so that you always be notified when a new video is posted. Thank you, and I'll see you next time.